So for me, the trading battery is your level of cognizance and your ability to be present. I didn't notice it until I started diving down to the lower time frame. It's basically as soon as I put a position on, it's like I start a timer or my battery starts depleting. If I'm oversized on the position, my battery is depleting faster than it should be.
Ladies and gentlemen, welcome back to another episode of the Expert Trader Podcast series. We got Cready Trades in the house, and he's wearing the Chart Addicts custom shirts. They were only available at the FX Summit conference. Darren, how are you, bro?
If I was doing any better, I don't think I could stand it.
All right, that's what I'd love to hear. We were actually just talking off camera, and so we're just going to continue off that conversation. You were telling me a lot of cool things. $1.3 million in funding. Tell people a little bit about your backstory first, actually.
Yeah, so I worked retail for a while, 16 years in retail management. I switched over to insurance a couple years ago. When I switched there, COVID came out. They sent everybody home from the office. I went home and my wife was trading, and she introduced me to the markets, basically. From there, I bought a few courses, uh, did some, trainings, analysis, back testing, all that stuff. Got about 6 months in, had some difficulties with like psychology and stuff. My good friend Angelo from TFT and Forex League talked me down from the ledge and told me to regroup. I took some time off. When I came back, prop firms started popping up, and I realized that, hey, like this may be a better route to go rather than loading a full account and burning down cash over and over. I can get on here and I can actually learn something. They've got a dashboard where I can see my performance measurements, things like that, and I can adapt and eventually get to a point where maybe I can make a living out of this. So over time, I got my first funded account. I lost it within 2 weeks, just like the statistic. Took me 6 months to get another one. After that, I got a payout from that account, and then from there, I just started using that money to fund more accounts. And then now I've got 6 200Ks and one 100K at 5 different firms. And I'm still doing evaluations, trying to get more funding in other places. Just really trying to fund my exit from the rat race. Trying to build that nest egg so that I can, move on and do other things that are, more desirable.
Like when you say, like, if someone's listening to this and they say $1.3 million in funding sounds like it's really hard to get, and you're kind of making it sound easy. Was the journey smooth for you, or did you have a lot of ups and downs with prop firms to kind of get to the stage that you are?
There was a lot of ups and downs. I believe I was fortunate, more fortunate than most, because one of the communities I was in actually offered a monthly challenge that we only paid $5 for, 10K monthly. So that there paired with budgeting from my job to buy another account a month. I mean, over a 2 year period, I probably did two challenges a month, minimum. So it was a long journey. There was a lot of challenges taken. There were a lot of breaches early on. There's still some breaches, obviously, but nothing, nothing ever. I'm not gonna say nothing ever because whenever you say nothing ever or never or whatever, something happens. But things rarely go in a straight line. Price action rarely goes in a straight line. You get into your goals rarely goes in a straight line. Um, there's ups, downs, there's retracements, there's corrections, all those types of things. So yeah, I've gotten funded. I lost my first account. I got some more accounts. Ended up trying out a trade copier, not knowing I wasn't ready for it. Lost some of those accounts that I'd accumulated. So I think I'd gotten from 50K up to 400K, and then I ended up losing 100 of it, and then I got to 700K, and then I lost like 250 of that, and then I got to 900 and lost another 100, and then now I've gotten more, obviously. But it's just the biggest thing I think for anybody that's trying to get into prop trading is don't fall into this belief that one account is enough, because it's not. Because if you lose that one account, like I did, that first account I lost, it was really devastating to me, because it's like, man, I spent 2.5 months getting this thing funded. I did phase one, I did a phase two. I mean, sometimes we'll have to get a retry or whatever. And, it wasn't really the cost of the account or the money or the dream slipping away. It was
Was the
more like,
time?
damn, yeah, it's like, damn, I spent 2.5 months and I just gave this thing back in 2 weeks.
Yep.
So, recognizing that and then taking the data from all those failures and the successes and just saying, my tendencies, my behaviors, and then adjusting my habits to better align with where I'm trying to go versus where I was at the moment was really, pivotal. That was like the changing of the guard for me almost.
There you go. And I do want to get into that, which is basically the difference between back then and now, just you as a trader and some of the habits that you're making, or some of the habits that you've changed. But I think that the story is really interesting. Like a lot of people really do I don't want to say they have one account, but they really try to take it one challenge at a time, and they really try to like go all in, put all eggs in one basket. Now, how did you approach it differently? Was it just because you were like, how did you approach your strategy to get this funding?
Yeah, so I tell everybody that there's a strategy within every portion of the process. So there's a strategy to passing an evaluation. There's a strategy to trading the funded account. There's a strategy to managing multiple evaluations. There's a strategy to mixing evaluations and live accounts too, and then trade copiers and all that stuff. For me, the way I approached it was really, if I bought an account, I would try and get through phase one because I knew phase two would give me more time. So phase one, I would go maybe higher risk, not super high risk, but maybe like I'd risk 1% per trade on phase one. But when I got to phase two, I knew I had double time. So then I would trade half size and keep it the same. That was back then, kind of. Now I've gotten more aggressive with it, obviously. And then the live accounts, I would risk 1/4%. So I'd go from 1% to 0.5% to 1/4% as a way of preserving. Now, I'm not perfect by any means. I break rules, my rules, I break firm rules, all the time. But putting those like pylons on the field kind of kept me in the area of play and let me know where the end zone was so I could get into the goal. So I look at it like, hey, like you got daily break, you got daily drawdown, you got max drawdown. If the max daily drawdown is 5%, there's no reason I should even take it close to that ever. Like if I get down 2.5, like 1% should be a signal to tread lightly. 2% should be shut it down. And if I get to 2.5, it's like, why are you still driving down this wrong road to the bridge that's washed out to go off the cliff? Like, stop, turn around, regroup, go do something else, type of deal. But yeah, going through those evaluations and stuff, and then going back into the data let me see my tendencies. Like, hey, am I over leveraging when I go into drawdown? Am I getting overconfident when I'm in profit? Am I not securing things the way I should? Am I letting my personal life affect my decision making? All those things come into play. And I believe that's what makes it so hard to do it is most people aren't willing to really dig into themselves or confront themselves. Because I believe that by confronting yourself is one thing, but then confronting your belief system or your behaviors is like a whole another level. It's like, yeah, you can talk to yourself in the mirror, but can you talk to yourself in the mirror and then have that person walk away from the mirror and behave differently than when they walked up to it?
For sure. And we'll get into that a little bit more, which is basically just sort of belief systems and self-image and how that plays into being a trader, like what you believe about yourself. Because maybe this wasn't even your goal to have this much funding, but I feel like as you got more progress, you started to have,
Mhm.
like all of us, we really just start to have more confidence in our ability, and the door starts to open up. So the belief system is like, well, maybe I can manage over $1 million in capital. And now that you get 1 million, you're like, you start to have a different belief system. You say, well, maybe I can manage three. And so that belief kind of builds. But when you were first starting doing these challenges to now, what would you say are the biggest changes in your behavior?
My behavior, biggest changes is going to be routine. And when I say routine, I mean it's more trading related. Like I still got things in life, like I need to work out more often than I do, more consistently, things like that. But like my approach to the charts, I put it out on Twitter a couple weeks ago, or it might have been last week. I've been breaking down sections of like my weekly log, and I put that together with all of my accumulated data from all those challenges. So when I come to the chart, so the weekend, I have a very specific process. The weekend, I have to have this sheet filled out. This is my like ticket of admission to the market. I've got all the red folder news on top. I know the dates and times, so I know when the market's going to be volatile. I know when I shouldn't be front running things. I know when I should be waiting, what I'm waiting for in some instances. When that lines up with the technicals, my chart's got to be marked up, ready to go each day. From there, I started identifying issues like things that would kind of bleed over into trading. I called it the different faces of tilt because tilt comes in many different ways. Like there's There's financial tilt. Like maybe I had a big windfall. Maybe I lost a lot of money. Maybe I had an argument with my wife this morning. Maybe my kid's sick. Maybe, all these different things that can bleed over into your trading, your performance, all those things. And then from there, I kind of realized that, hey, like I have trading capital in these accounts, but I also have mental capital that I have to be aware of and manage as well. So one of the things that I call it like my trading battery. So I say, hey, like when I get up in the morning, if I got proper sleep, my charts are marked up, everything's good, my battery's on 100%, I can execute, normal flow. But if I get up and I'm tired, my charts aren't ready, maybe I shouldn't be entering the market as swiftly, as aggressively, or maybe I should be going half size. Maybe I need to take that time to get those things in order before I do it because everything, well, how you do one thing is how you do everything. I've heard you say it, I've heard so many people say it. So just that consistency of knowing, hey, I know when the news is, I know what my triggers, my behaviors, tendencies are. Um, at the bottom of the sheet, I've got a risk chart where basically, depending on the account size, because obviously I've got different size accounts and evaluations, I've got a risk chart, so I'm consistently risking the same amount based on the account size. So when I enter in a trade, I can be confident that, hey, if I put on this one lot on NASDAQ on 8 cap and I put a 50 pip stop on it, that's $500 loss. That's what it is. I'm not looking at it like, oh, is it going to go past it? Like that's what it is. And of course, with different brokers and stuff, I've had to evolve even further. And so I have a chart for purple trading. I have a chart for 8 cap. I have a chart for FTMO and my forex funds because there's different prices, different places. There's different lot size calculations. Some of them do lot sizes more similar to futures, like the ticks almost, and then others do their own thing. So being aware of all these different variables that can come up over the course of a day. I feel like your trading plan has to have the answer to any problem that can arise while you're trading. If something comes up that's not in your plan, you need to add it or you need to figure out a way to work it in. But essentially, if something happens in the market, I should be able to turn my head, look at my plan, and say, hey, in this situation, this is what I do. I know why I'm doing it because I wrote it down for a reason. I discovered something that was valuable, something that was noteworthy. So I know these things work over time, but it's just up to me to perform. And that's the hardest part, I believe, is the management of yourself.
And making things like what you're mentioning is number one, being organized, but also just being very clear. I think clarity is something that we talked about off camera too, which is when you're very clear about how to handle different situations in the market, you don't get caught up in a lot of guesswork or gambling. And for me, I just found a way to kind of get my head. So I have a flow chart. Is it my strategy 886 market open? Okay, if yes, take the trade. If no, go home. All right. So it's basically just like so having that clarity of when you should get in, when to not get in, I think is got to be a huge reason for your success because that's what builds consistency. I do want to touch on the trading battery though. I don't think people make mistakes like, how do I phrase this? I only ever mess up or break my strategy when my trading battery is low. Can you talk about the trading battery? Is it just awareness and focus, or what kind of mental state is that trading battery?
So for me, the trading battery is really your level of cognizance and your ability to be present is probably the best way I can think to put it. So, as time goes on, and when I say time, like the trading day moves on, depending on the time frame you're on, some people might not even need to monitor trading battery. Like if you're swing trading on the H4 or the daily, you probably never or rarely get into these types of situations. I didn't notice it until I started diving down to the lower time frames. But when I have positions on, it's basically as soon as I put a position on, it's like I start a timer or my battery starts depleting. If I'm oversized on the position, my battery is depleting faster than it should be. If I'm maybe got too many positions on, same deal. So being aware of, hey, am I trading? Am I over leveraging? Am I experiencing greed, FOMO, whatever? All these different things based off of how heavy my position is, or the type of day I had before, or the profits that I want to make, or what I want to buy with profits, whatever it is. All those things factor into how much my battery level is going to fluctuate. Now, over the course of the day, most people aren't gonna let their phone go to zero, right? Like you get down to 20%, you're gonna charge it. And for me, as an intraday trader, a lot of people call me a scalper. When my battery's low, I can't recharge it while positions are open.
Mm-hmm.
So for me, once I close out the bulk, once I'm flat, that's when my battery can actually recharge. And that was
Mm-hmm.
something I noticed through my data and my rule sheet as far as like, hey, if I make two directional bias changes in an hour or in 30 minutes, shut it down for an hour. Hey, if I release 1% of profit, shut it down for an hour. Because as I was trading, I started noticing these behaviors and I wrote them down and I shut the chart down. I would come back to the end of the day and be like, oh man, it's after lunch. I feel okay after lunch. I feel okay now. I feel like I'm back. Like I'm recuperated. My battery's charged now. I can go at it again.
Yep.
But if I keep going at it while my battery is low, that's when the mistakes, the mental errors, the things that we all try to avoid, that's when they creep in and do the damage.
But that's where it gets tough, is that when your battery's low, typically that's when willpower is the weakest, right? And
Mhm.
so how do you kind of avoid, or how do you get yourself out of that while your battery is low, or do you just avoid having your battery low at all while you're trading?
So I have a friend out in California that does counseling, like social counseling or whatever. And I was talking to him because there's a lot of psychological things in trading that relates to everything else.
Mm-hmm.
And he was telling me one of the things that he teaches his clients is a thing called a halt. And he says they do hourly checks. Well, they don't do hourly checks. I implemented hourly checks for myself where basically, um, hey, H, am I hungry? A, am I angry? L, am I lonely? And then T, am I tired?
I said
And halt.
hungry,
So if any of
angry,
the
lonely, and tired.
lonely, yeah, yeah.
Oh, that's so good. All
If
right.
any of those things are popping off or multiple are popping off, I know I got to take a break. And in learning that from him, I went on Amazon. This is gonna sound crazy as hell, but I went on Amazon and I bought an hourglass. You know, like the old school with the salt that drips through one grain at a time. Don't tell me you have one.
I have a 3 minute timer. It's for like small tasks. It's like if I can get it done in 3 minutes, I'll do it right now. I'll just flip it,
Ooh.
get it done.
Right. Yeah. So I got an hourglass where basically it's a 1 hour hourglass. And if I start to
Nice.
enter any of these behaviors, tendencies, start feeling some type of way, close positions, mark down what happened on my log, and I flip the hourglass and I wait for an hour to re-enter. I've got other, I call them offenses, um, that basically, the higher severity ones. So I got like misdemeanors and I got felonies. I don't name them that, but that's the idea. Like, hey, I got some stuff that I can come back in an hour. I got some stuff I can come back in 4 hours. I got some stuff I come back tomorrow. I got stuff I park it for the week.
Right.
Um, and like everything else, like I said, I'm not 100% perfect at adhering to these things, but those are the things that keep me on the field of play, that keeps the car on the road, kind of deal. And I know that, hey, once my time's up, once my battery's low, once A, B, and C has happened, I got to park it and come back because I need to recharge and come back clear.
A lot of people are probably, kind of thinking to themselves, why are we talking so much about the mindset piece of this? Is the new traders don't really understand how important mindset is, because eventually it's really like cutting out the stuff that's hurting your trading that ends up being the most beneficial. So doing less.
Mhm.
And that takes a lot of mindset work and kind of figuring out what your flaws are and all these other things. So I kind of appreciate you walking us through that. But let's talk about strategy and shift over to something you mentioned earlier, which is there's different strategies for different phases of funded accounts. Could you give us a quick breakdown of what that looks like?
So for me, my mindset is shifted a bit as far as how I handle funding. There was a point where I was kind of like hodling funding, and it was like, hey, I would go and draw down, and I would try and work it back, try and work it back, and it was a point that you actually pointed out when we were at the DMV conference back in February, I think it was. It was like if you go into drawdown, you can't start risking less because it's going to skew your everything, and it's going to make it harder to get back, if not impossible.
Yep.
So I realized from that experience that hey, like if I go deep in the drawdown, I can't start risking a 1/4% when I've been risking 1%. Like if I lose the account, I lose the account. But my approach is get through phase one, I'm not gonna say as quickly as possible, but well within the time. I'm either gonna get through or I'm gonna try and get a retry. Once I get to phase two, I can back it down. Depending on what I've got going on, I might risk more on phase two to get it finished so I can go to another phase one or go back to live trading, whatever's happening. Um, so really just managing, it's almost like managing a roster. Like I've got like a basketball team and I've got a starting five and these guys are playing, but maybe I'll put this guy on the bench and I'll pull this one out and, see what I can do with this until it either hits target or it loses a certain amount. Because I'm trading pretty frequently. Like I'm trading Asian session and New York. So there's days with use of the trade copy, there's days I touch 6, 7 accounts between two sessions.
And for most people,
So
they'll typically have one, maybe two accounts. And so
mm,
what you're doing is like you're basically managing a portfolio of accounts. And so you're
mm,
playing a little bit of a different game. So you have to trade and manage the trades, but you're also
mm.
managing the accounts, which is a whole different, it's like 3D chess versus regular chess.
That's what
And
I'm saying. There's
so
a whole different strategy for everything. Like everything you encounter is going to require some type of system or plan for it.
now,
Um,
if someone is just trying to focus on one or two accounts, because you did mention to me earlier that having one
mm,
account is just not the way to go because
right.
it puts too much pressure on that one account.
Mhm.
So if someone wanted to take it a little bit more simple, is there a way that you would approach that? Kind of knowing what you know now about how to handle different accounts.
And so if I had to start over, I would do probably two at a time, and
Mm,
I would alternate between the two. My reasoning for that is if I go into drawdown on one, it's not going to affect the other, so there's still hope. Um, so
okay.
like
Yeah, yeah.
87% of your self talk daily is negative by default. So when that stuff starts creeping in, you got to move to the opposite. So if I get on one account and I lose 1% or 2%, I park it. I see what I did wrong, and when the next opportunity presents itself, I'm on a different account, and I'm not. It's kind of my way of forgetting the last play. So like if I was a quarterback and I just throw an interception, you got to keep playing the game. When you get the ball back, you're not at the same spot in the field. You're somewhere else, and you got to play from there. I can't play from where I threw the interception. I got to play from where I have the ball right now, and that's kind of my approach. Is every account is in a different spot on the field, kind of.
Got you. So it's basically like if you threw an interception, but then you get to turn around, play a completely different game that's right next door, throw a touchdown, boost the confidence, everybody loves you
Mm-hmm.
again, hop back onto the field, and
Exactly.
okay.
Yeah,
So that
that's what
makes
it
a
does
ton
to
of sense.
your mental. Yeah,
Okay.
but it
So
might not work for everybody. That's like a personality thing too, I think.
of
So,
I mean, this is what I tell folks is that when you're listening to this podcast, take everything like 99% of stuff won't apply to everybody. But that 1% that does resonate with someone, because we are covering a wide range of topics. We've gone through psychology, risk management, account management, passing challenges, ups and downs in the trading journey. One piece is really all you need to really realize what you're doing wrong and what you need to fix to get to the next level. And so when I used to listen to content, it's like, I'm not trying to everything in this podcast is relevant to my life. But
mm-hmm,
that one piece where they were like, when I was reading the book, you can't start risking less when
mm-hmm,
you start losing. You have to stay consistent.
mm-hmm,
And then when you
right.
start winning, you get more excited, but that's when you should reduce your risk because you want to protect your gains. That
Mm-hmm,
one piece stuck with me, just keeps echoing and echoing. And that's all I needed for that 2 months to really shift. So hopefully
mm-hmm.
that's how folks take this podcast too, for sure. So when you're looking at where you really want to take your trading and getting to the next level, because people say $1.3 million in funding, you've reached the top of the hill. But obviously, you know what you're capable of, and you might want to take it to the next level. Do you know what you want to do with trading and where you want to take this thing?
So right now, I'm kind of at a fork in the road. I'm trying to figure out exactly what I do as far as the markets and whatnot. So as a way to keep myself sharp, I've started doing blog posts. I post them on Twitter pretty frequently, not as frequently as recently, because before I was posting mostly like analysis and post trade analysis, why I entered, what I was looking for, things like that. I've kind of shifted more to like the account management portion of it, the risk management, the back end type of things. So I'm putting that content out there. I'm offering mentorship one-on-ones with people that are more interested in some of the systems that I've developed for myself and the things that I'm doing. As far as the markets, I'm trying to get more funding, obviously, with prop firms on the FX side. So right now I'm with 5 firms. I don't know if I'm gonna go anywhere else at this point because I've still got accounts that I'm running. I keep saying, hey, I'm going to finish all these evaluations and then buy something else. But there, I kind of ran into an issue, and it's not even an issue; it's a good problem to have. There's a guy from the 1960s. He was a black man in Alabama, the civil rights time, right? This guy accumulated $1 million of wealth during the Jim Crow era. So like this is impossible. Like you made $1 million, a black man made $1 million in Alabama during Jim Crow, right? So one of his quotes was, "When you have a reputation for having money, people will give you money." So I look at funded accounts like that. When you have a reputation for having accounts, people will give you evaluations to get more accounts. When you have a good credit score, that's your, like your financial responsibility rating kind of deal, right? When you have a good credit score, people will lend to you. So I feel like the more funding I get, the more opportunities will be available. So I'm just kind of waiting it out now to see because I got a one account. I got it from Funded Engineer. I got it for free, like literally off a giveaway. It was a 100K account. I've gotten like 20K in withdrawals on it. And then with that one account, I bought two more 200Ks. And then I failed one and I passed one. So it's just recycling everything. But from FX profits, I want to take this out. I started a small MT5 personal account. I'm kind of done with like dealing with the brokers that way. Like if I'm to the point where if I feel like I have to send something via Bitcoin, I don't want to do it. I want to go, the US standard way, I guess is the way to put it. So I've opened an account with TradeAvate. I'm trying to get into futures so I can actually trade indices. And I bought 4 evaluations with the Apex Funded Trader last week. I passed phase one on 3 of them already. So I'm trying to get into futures too, so that eventually I can fund a personal futures account. I'm sure it won't have to be huge, but I mean, if I can have a personal 50K futures account, I know I can grow something like that. And if I can put maybe 50K into an Oanda or a Forex.com, somewhere like that, then I can grow that as well and basically get to that point through the use of funding and other avenues of business, that way once I do get out full time, because I still work at full time, obviously. Once I get out to full time trading, I've got prop accounts, I've got a futures account personal, I've got an FX account personal, and I can kind of do the same thing I'm doing, just keep the rotation going.
First off, I love that breakdown because it shows how much planning you've already done, kind of how well you've thought this out. You have to be very organized to manage this many pieces. So I really want to give you some kudos. But if there's someone listening to this, probably at the gym or some shit, or maybe at their house cooking, whatever they're doing, they're listening to this podcast and they failed a bunch of challenges. They're kind of down on themselves, like, man, I'm not going to figure this out. I'm one of the 95% that can't make it. These guys have it so easy. What would you tell that person? Or if that was you on the other side of the screen from years ago, what would you tell them?
So for me, there was a pivotal point that I didn't even mention. Um, I was in chats and discords and telegrams, and I was, in and out, flipping strategies, all those types of things. And early on for me, I was kind of wondering, like, is this real? Are these people really trading live accounts? Are they really getting withdrawals? Are they really making this money? Are they driving these cars? And the entire time I had that doubt in my head, I made zero progress. Like I had to remove that doubt before I could do anything meaningful. So just realizing like, hey, there's people out here that are managing 8 figures in capital. There's people that are younger than me that are managing 7 figures in capital. There's people that have been trading longer than me or less time than me. Like everybody's got their own spot. And that's kind of what I was hinting to at FX Summit when I was on with Riz and I was did a like a brief short with TFT was like stay in your lane or there's going to be a collision. Like you got to manage your portfolio, your accounts, your journey. You can't worry about where everybody else is and what they're doing and things like that. I mean, yeah, you can look over and see where they're at, or yeah, you can dream about your destination, but you still got to drive the road to get there. So yeah, you can. Yeah, I'm in Miami. I'm driving down Collins Avenue or whatever. It's awesome, but get back to where I'm driving down 95 through Georgia. But yeah, I'm visualizing riding in that C8 Corvette with the top off with my wife in Miami. But right now I'm only in Georgia. Right now I'm still on the plane and get back to work. you know.
There we go. I think that was really well put. Skepticism, I think, is that concept that you were just describing, is when you're too skeptical, you're kind of like driving with the emergency brake on. And you can't really hit your full potential because you're always second guessing decisions. So I think that's really important. Skepticism is the opposite of self-belief. And self-belief, I think, is one of the most powerful things. So, guys, master class here. If they want to find out more about you or kind of get connected with you, where can they find you, bro?
CreadyTrades.com and Twitter, where I'm most active. I'm also on IG. I'll give you the link if you want for my dot card or whatever. You can put it in the description when we're done.
Ladies
But yeah,
and gentlemen, make sure to
CreadyTrades.com is the best place to get me.
No, I got you. I'm about to get you out the way with this outro. Ladies and gentlemen, if you guys want to learn more, make sure to click the links in the description. We're going to have all of Creedy's information for Twitter, for Instagram, and everything else that he's pushing. Darren, appreciate you stopping by, bro. Thank you for all the gems, and looking forward to having you on again to get a little bit more in depth about how you manage 75,000 different accounts from all over the place in all these different firms and the logins and all of that. So I appreciate you, bro.
Thanks, man. I appreciate you having me on. And if we don't link up before, I'll see you in Dubai.
No, we'll definitely link up before. We'll set something up.